Hello guys, Jaisal Bhatia here, co-founder of Equwise. So guys, this video is one such special video because this video is all about option buying. Okay, option buying, option selling. So mainly about options. Okay, and believe me, you are going to see and learn something that you would have never seen before. Highest possibility, highest chances you would have never seen before. You wouldn't know about this before. Okay, so I want you guys to watch this video till the end, okay? And I can guarantee you that high chances either you will quit option buying, okay, or you will understand option buying far more better than what you are doing now, okay? You will pause it for some time. Third possibility, you will come to me, okay? So these are the three possibilities, okay? Stay till the end, watch it completely. It's going to be a very much mind-boggling video, okay? It's going to enlighten you like anything. You wouldn't have seen something like this before. I can guarantee you that. Okay, highest chances you wouldn't know anything like that can actually happen. Okay, so if you're a beginner, you can see this. If you are someone who has already started option buying, you are already in the options journey of intraday. If you are a person who's already a pro, it's for everyone. Okay, I'm going to talk from basic to pro level of language. It's going to be easy to understand. Okay, you can take your measurements accordingly. Okay, so let's start. Okay, so guys, to explain you guys, basically I have made a mathematical formula and I have put it on a chart. Okay, so what that mathematical formula does is it summarizes many things, okay, and concludes where possibly a seller will keep their stop loss and where a buyer would keep their stop loss. Okay, so we will be able to see where sellers are present, where buyers are present. Okay, now this is something that I've told you is going to happen in this video. Believe me, you wouldn't have seen something like this before. Okay, so stay with me, watch this video till the end. Okay, and I know for sure that you're going to like it. Okay, so please share it with your friends and help them to understand what this option buying, option world is all about. Okay, so now let's start. Okay. So first of all, how is a profit made in any deal? Forget what do you call stock market. Okay. How is profit actually made? Now let's say you are someone who trades in a non-perishable item. Okay. So a non-perishable item, something like a t-shirt. Okay, just a t-shirt. So what are you going to do is you are going to the manufacturer and buying, okay, directly from him at the cost of 100 rupees. Okay. Now you are not going to keep any godown or something like that. You are just going to keep that in your home. So there's no electricity, there is no storage cost or anything. So your actual costing is 100 rupees. That is for the t-shirt alone. Okay, now you go and you sell it at 120 or 150 rupees, or let's say 200 or 300 rupees. Okay, so whatever price above 100 that you sell, that difference will be your profit, right? Simple, perfect. Okay, so over here the result, okay, the power of what result you want is with you. Okay, so you want, you can close with 50% profit, you want, you can close with 100% as margin. I mean, like double. You bought at 100, you will you sell it to someone at 200 rupees, like that. It's all up to you. So the power of the result is in your hand. Okay, now let's come to the markets. We are especially talking about intraday markets and intraday in options. Okay, and intraday in options, we are mainly going to talk about option buying. Okay, why this is very, very painful place to make money. Okay, I'll tell you. Okay, so as we saw in that example, someone bought at 100, he sold at 200, he simply makes profit. Okay, now the power that he has is he either he can make profit of 20 rupees, 50 rupees, 100, 200, it's all up to him. So the probability of profit, the probability of power is highly with him, right? Now, when it comes to intraday, okay, now you need to understand that the price fluctuations are based on people buying and selling, either through a algo or or they themselves are doing. Okay, so end of the day, a human is involved in this. He might have his own emotions behind, he might have his own logics behind, his own fundamental reasons behind, whatever logic may be, the price movements, okay, somewhere or the other, it's based on a person's decision, a human's decision. Okay, now there are so many people in the market, there's so many participants, so what's going to happen in the chart is highly randomized. Okay, it's not something which is going to, which is very easy to predict what can happen in the next. Okay, you will only have a probability of it. No one can say 100% of the times this will happen. Not possible. 95% possible, 90% possible, and so on. Okay, so simple. So the result, I mean, what's going to happen next in the market, especially in intraday time frame, is highly randomized. Okay, so the power of result in your hands is very less. The degree is very less unless it's highly back tested. Okay, the result is very less. I mean, the power of controlling the result is very less when compared to the first example, right? So now when it comes to option buying, okay, for now let's see how is a profit made. Okay, very simple. As I told you, it's a randomized outcome. So next one can be a red candle, next it can be a green candle. 50-50. The candle's height can be very big, it can be very low. The red candle's height may be very big or very low. Again, we don't know. N number of combinations. Okay. So, as we know, it's randomized. Now, how is profit actually made from a trade? Okay, in terms of trading in stock market. Okay, so in this world, there is a combination of win rate and risk reward ratio. Okay, now let's say if I may, if how do I explain to you? Win rate is nothing but how many times you hit a particular target. Okay, let's say if you have kept 3 rupees as target and 1 rupee as stop loss, if you say 50% is your win rate, that means 50% of the times you are hitting that 3 number, the number 3, you are hitting it. I'm not telling that you are planning for 3 and you are executing at 2. That is not called as 1 is to 3 risk reward system. It's called as a 1 is to 2 then. So averagely what you execute is the risk reward ratio. Okay, and how many times you are able to execute it is the win rate. Simple. Let's say you are keeping 1 rupee as stop loss, you are averagely taking home 1 rupee of target. Okay, so over here the risk reward ratio is 1 is to 1. Simple. Now how many times you are able to hit that one green, I mean one profit? Okay, that is nothing but called as win rate. Okay, now because the market is filled with randomness, we don't know whether the next one we are going to hit the target or whether we are going to hit the stop loss, so that is not in our control. Okay, but as we have done huge amount of back testing, we we somewhere around get a number that 40% of the times this happens or 50% of the times this happens. Okay, let's say 40% of the times we hit this 1 is to 3. That means we are able to take 3 rupees home. Okay, and we are able to give only 1 rupee back into the markets. And this is happening 40% of the times. So when this kind of mix is there, 40% with risk reward ratio of 1 is to 3, this end result will give you a profitable deal. I'll tell you how. Very simple. Okay, let's say we take 10 trades. Okay, 40% of the times we win. So 4 into 3, 40% of 10 trades is nothing but 4 trades. Okay, so 3 into 4 is nothing but 12. Simple. So we made a profit of 12. Now how many times you lost? 6 times we lost. 6, and how much we lost? 1 rupee. So 6 into 1, 6. So 12 minus 6, what is it? 6, 6, right? So again we made a profit. So this is called as a profitable system, profitable trade. Okay, it happens in a series of number of trades, not one trade, two trades, or three, and so on. A series of trades we have to sit and watch. That's where we will come to know what is it, a profitable system or a loss making system. Simple. So in the outer world, we buy it at 100, we sell it at 120, done. That's it. This is only the only method to make profit. Okay. If you have cost involved, then you have to, sell it in that way, so that in net terms, you are able to generate some profit. Okay. Now, but in the trading world, it's not like that. It is a combination of win rate and risk reward ratio, mainly because there is a concept of randomness in the market. You get it? So that is the thing. So you understood this simple thing, right? Now, risk reward ratio plays a very, very crucial role. Okay, very, very important role in a profitable system. Okay, so just remember this sentence and keep this aside. Okay, now let's get inside the chart and understand why option buyers lose most of the times. It does not matter whether they use moving average, they use Bollinger Band, what not, anything and everything they try to use, most of the times they end up making a loss. Okay, I'll explain to you how and why. Okay, stay with me, do not leave it in between, do not skip, don't do any kind of stand. Okay, you're going to miss something or the other then. Okay, so let's get into the chart. Let's exactly find out what is going on. Okay, so over here, as I have explained to you before, okay, so I have made a mathematical formula, okay, which does a lot of mathematical stuff inside the screen, okay, and it is able to conclude where are the sellers present, where are the buyers present, where they have kept their stop losses. Okay, anyone can reach over here, but it will take a lot of time to, for them to, get to this point. But okay, let's say that we have this. Okay, so this is what I've made, and I've named this as free fly fall. Okay, now let's take this strike price as an example. Okay, let's do one thing. Let's just change the strike price. Okay, so okay, let's say we just take this put. Okay, now let's first understand what's happening. Okay, so the red line indicates where are the sellers present. Okay, where are they keeping their stop losses. Okay, and if it is buyers in power, where are they keeping their stop losses. Okay, so this is all about that, right? So let's just first look how is this working. Okay, so when the price is above the red line, that clearly indicates that buyers are in control. So now who are these buyers? Buyers are someone who wants to keep buying at higher price. Okay, they are ready to keep buying at the higher price. Okay, so over here, this is a sentiment. It's just a feeling. It's just a psychology of humans, directly or indirectly playing in the markets. Okay, either through algo or either through manual trading or whatever it is. So psychologically, people want to keep buying at a higher price. So over here, whoever is ready to buy at higher price, where are they keeping the stop loss? You get my point? If they're buying at 100 and then they're buying it again at 110 and then again they're buying at 120, so averagely somewhere they're keeping the stop losses, right? Where there is their pinpoint, I mean pain point, sorry. Like below this, I cannot stay in the trade, I will exit no matter whatever the game is, right? So over here, averagely this red line says that this is where the stop loss is. Okay, so when the price is trading above that psychological level, highest chances it will just go up. You can see it has just gone up, right? And then when the price is below the psychological level, that clearly indicates that whoever is in the control do not want to buy on higher prices. They want to keep selling at lower price. Simple. So the psychology of major participants of people is in a way that they just want to keep selling at lower price. In the sense they bought at let's say 100. Okay, let's say they bought at 50 rupees way back. Whatever. Just a hypothetical example. They bought at 50 rupees. It went till 100. Now it has come till 90. They are selling. It came to 80. Again they are selling. Though they are in profit because they bought at 50, they're selling at 90, they're selling at 89, 88, 80, 75. They're continuously selling at lower levels. Okay, so it's the scenario is like there is a fear that they don't want to buy it on the higher highs. They want to sell it at lower lows. So this is where this comes in. So we can see that sellers, I mean, the people who want to just keep selling, averagely they are keeping their stop losses over here. Okay, in the trading world, you can also sell first and then buy later, right? So people they are selling over wherever they're selling, they are keeping their stop losses over here. So you can see when it comes close to the stop losses, they get a little bit scared or what, I don't know, or they want to re-enter again and they start selling again. So from here you can see there's a sharp fall again. Okay, so one thing that you can observe is below this line, lower lows are created and more red candles are created. So what does that mean? When sellers are in control, they will not let the price go high. Okay, and imagine if you are an option buyer over here and you are trying to average over here, what will happen? You get it? Your loss will keep increasing. Okay, so first main reason why option buyers lose money itself is because graphically and in terms of price, they are entering when the sellers are selling. They are entering when no one wants to buy. That's the time where they are buying. Okay, so eventually what will happen? Their value will keep going down, it will keep reducing. Okay, now the second reason why option buyers lose money is because they are not understanding the mathematical game behind making profit. Okay, so now let's say a person, XYZ person, he bought over here, he sold it somewhere over here, he made profit. Okay, now when it came down, okay, let's say in this portion, I'm not talking about this price, it came at this level. Okay, at this time, at this particular time, it came. Okay, now what he thought, it came till this level before and it shot up, so it will do the same, so he will buy over here. But he does not understand that at this portion, the sellers are in control. This is a scenario where buyers are not available. In the sense, buyers, what do I mean by buyers is someone who wants to keep buying at higher levels. Okay, see, buyers does not see, understand one thing that for someone to sell, there must be a buyer. So always in the market, buyers and sellers, it will be same. The quantity will be the same. Okay. For every buyer, there will be a seller. For every seller, there will be a buyer. Simple. So we cannot say buyer or seller. So the way, if I say buyer, that means that someone who wants to keep buying at higher highs. Okay. When I say seller, that means someone who wants to sell at lower levels. Okay. So when it came to this position, it is graphically coming to a place where only there are sellers who wants to keep selling at every level. Okay. Not buyers who want to buy at every level. You get my point? So now what happens? Graphically, he came over here. Now what happens? It went down. He bought more, and then it went up a little bit more. He was like, okay, now I'm somewhere in the green. From here it will shoot up, and that doesn't happen because graphically this is a region where sellers, I mean, there are people who want to keep selling at lower levels. So they will sell here, they will sell here, they'll sell here. It kept coming down. So you get my point. So because of this kind of scenario, mathematically they are losing money. So they will buy over here, okay, and then over here they will continue to sell. So where they tried for 1 is to 3, they are creating 1 is to 0.5. So 1 rupee they are ready to lose, and 0.25 or 0.5 they are ready to make. Now you tell me, this keeps happening most of the time. Okay, now I'll tell you why this keeps happening most of the times. Okay, so understand one thing. If you are someone who has 1 crore rupees, okay, you have 1 crore rupees, what will you do? You will be like, "Arey yaar, I have 1 crore rupees, so I need to play it very safe because I don't want to lose 1 crore rupees, because if I keep 1 crore rupees in my bank, I'll just be making 7 lakhs per month, per year, right, through FD. So I need to keep this money safe." So what they will do? Someone with higher capital, they will try to play it very safe. They will try to play it in a way where highest probability is that they will make money. Okay. So now in terms of options world, you need to understand one thing. Just a second. Yeah. So in the options world, you need to understand one thing, that it is a sellers oriented market. Okay. By sellers, again, I mean someone who wants to keep selling at every level. Okay. So this is option market is somewhere, it is a sellers oriented market. Reason being, I'll tell you why. Because there is a concept of time decay. Time decay, what do I mean is, um, towards, there is something called as expiry date. So by the expiry date, if, okay, if but in very simple terms, towards the expiry date, every option price will try to move towards zero. Simple terms. Okay. In a very simple way, if I have to tell you, okay, this is what happens towards the expiry date. You can see here there is an expiry date, 16 Jan 2025. This is the expiry date. So towards this, no matter wherever the option price is, it will move towards zero. Okay, the graph will go like this. Okay, so it is a sellers oriented market. It is a place where people want to just keep selling at every level. Okay, so in this kind of market, option buyers come and they try to make money. How will they make money? Okay, so they are stuck in this kind of loop. Okay, so graphically they are making more mathematical mistakes. So now you tell me something. 3 rupees you lose, 1 rupee you make profit. Are you going to make money? You are not going to make money, because mathematically you are so wrong. It's like you are buying 100 rupees t-shirt from some manufacturer and selling at 70 rupees and praying that I'll make profit. How will you make profit? You can't make profit. You get it? So, this is the thing. Okay, now let's just go back and see how it worked. You can see, if the price is above this, that clearly means buyers are in control. That means there is someone, the mass participants just want to buy at every level. So they kept buying the here, and the price kept shooting up. Okay. Now, there came a time where it fell below this. That means buyers stop losses started triggering. So buyers started exiting, and new buyers don't want to enter, and sellers are someone who wants to keep selling at every level. They started coming over here. That mentality kind of people, they started coming. So you can see they kept selling at every level, even though there was a bounce, they again started selling and it fell even more down. So you get the point. See over here also. Okay. If it is above this, it keeps going up. If it comes down, that's it. Those people who want to sell at every level, they'll come over here and then they'll just put it down. Okay. So graphically, okay, chart, if it is in the current weekly expiry, 80% of the times sellers will take the control. Okay, only hardly you will see places where the price will go above the line. Okay, see, because today the market fell little bit more, so that's why you are able to see over here this burst, this small burst, and this over here at here. Okay, now let's just change it to some call options. By the way, if you are someone who wants to get this indicator, I will leave my Instagram ID in the description below. You can direct message me from there. Okay. It See, it is no point you guys to use this indicator if you have less capital. If you have like 2 lakhs or 3 lakhs or something and you want to try this out, you can definitely try it out. Okay, you will be able to generate 3k 5k a day averagely, and you will be able to create some profitable game out of this. Okay, if you can work. So if you want to try it out, you can just text me in the Instagram, and then I will take care from there. Okay, so yeah, let's go to calls. So you can see anytime if it goes above this, that's it. So this is what this indicated. It does a lot of calculations, and it comes to a psychological understanding, okay, where people who want to buy at every level will come, where people who want to sell at every level will come. This has its own way to calculate that, and I'll tell you. Okay. So this now you guys can understand that most of the times the chart keeps going down. So where will buyers make money? Now the probability of someone to get this kind of mathematical formula, okay, it'll take years, it'll take decades for them to reach to this position, okay, and to make something like this so that they can understand what is happening, where can I buy. Okay. So if I, let's say, what is the price sorry 93. So if I want to buy at 93, the only way where I can make profit is if the price keeps going above this red line. Simple. If it goes below this red line, there is no point of me staying in that trade. Okay. Because I can clearly understand that those kind of mental people will come. Mental mean not literally mental, mentality kind of people who want to sell at every level will come. And you can see 97 they short, 91 they short, 80 they short, they kept just shorting it. So okay, so there's no point of me staying in this. So over here, if I have this indicator, I can create a positive, system. How? That also I'll explain to you. So because we know when to trade, okay, we know we have to stay in the game only when our kind of mentality person comes who wants to buy at any level and any and every level. So that is where we will buy it over here, and below this we will keep our stop loss because we know that below this those people will come who want to sell at every level. So there's no point of us staying over here. So because of that, we will make at least 3x return than what we are losing. So 3 times the return that we are losing. We can keep such targets. Okay. So you can even check over here. Entire time the market kept falling, we are out of the trade. We are not at all trading in the market. Okay. Over here we traded, one stop loss hit, done. Second stop loss hit, done, no problem. Third stop loss hit, done. Three stop losses hit. Now we entered over here and we made 3x. So whatever we lost, we got it back. So end of the fourth trade, 4 trades, nothing we lose. Okay, so the probability of profit, the probability of result, the control is more in our hands using this. You get it? So this is the dark reality, guys. The price will keep going down, okay, and option buyers, of course, most of the option buyers will not have access to something like this, so they will keep buying at every level, sellers will keep selling at every level, they will make profit, you will make loss, done for the day, that's it. Okay, but let me tell you something, don't think that if you have this you will generate money easily. Okay, you can generate money, but there is a challenge. The challenge is ourselves. Okay, we ourselves will spoil this game. How? I'll tell you. patience. You will be like in a day only one entry or two entry or three entries are coming. How do I make 5k a day? How do I make 4k a day? But that's the reality. We have to wait. No other option. In that hurry burry, if we make the trade out, we took the entry over here, we didn't take the stop loss over here, the sellers will come, they'll keep selling out. Okay, so even after having this, there is no guarantee that we will still make money. We need to have highest form of discipline and we need to keep our emotions aside, only then we can make money. So the dark reality of option buying intraday, especially in intraday, is like this. Okay. Now imagine if you have done swing over here. You bought over here, it's just continuing to go down. No point. Okay. Option buying in swing, it'll only work if you can buy it over here and then somewhere sell it over here. Okay, that's the only probability. I mean, that's the only way you can make profit in the 3-4 days or something. Because time decay is working every second. You cannot fight against time decay. The chart will always try to hit the zero price. Okay. So this is the thing, guys. If you're a beginner, look at this. Are you going to trade in this kind of market? No, you put Bollinger, you keep whatever you want, you keep trying. You will not be able to get the psychological levels, and because of that, you will make losses most of the times. I will tell you why you will make. No, you guys must be thinking nothing like that. I have my own indicator of mix or something like that. But understand one thing, okay? Below this line, more red candles will be made. Okay, more number of red candles will be made. Bigger size of red candles will be made. Okay, less number of green candles will be made, small sizes of green candles will be made. So mathematically, no matter whatever indicator you put, you will be losing money over here. Understand that point. So if you are a beginner, this is the reality. If you can in a way come out of this, find your own way to do this, well and good. If you want to take my help, well and good. If these two things are not going to happen, stay away from option buying. It's not for you. Okay, if you're an option seller, then the game is different. You guys can take care by yourself. Okay, if you are an intermediate person, do a lot of hard work, try to get to this point. If you cannot, again take my help. Okay, I'll give you my indicator. Of course, I'm going to charge. Nothing is going to be for free, because even I have done a lot of hard work, a lot of failures I've faced, even in option buying. Okay, even I have lost a lot, I've gained a lot. So in that journey, of course, I can definitely charge something, right? So if you guys want, you can come over here. And if you are someone who's at a good capital position and who still is adamant with option buying, again can definitely make use of my system as well. But this is only going to work if you are disciplined enough to take 1:3 kind of trades. You cannot aim for the moon. You cannot aim 1:5, 1:10 with this. No, you cannot. Okay. It is rarely going to happen. But if you are someone who wants to do 1:3 kind of trades, you can take this setup. It will be helpful for you. Okay. So that's it, guys. I hope you enjoyed learning a lot from this video. Okay. So share it with share it with your friends, share it with your trading community, so that let them understand that this is the reality of option buying. This is what actually happens in the market. Okay. And it's not going to work. So whatever it is, the reality is in front of you guys. Stay away from option buying. If you cannot come to a way to crack this, stay away from option buying. You can do intraday in equity. At least there is a better chance for you to survive over there and make money in the long run, or go for positional, or go for investing into multi-baggers. Okay, so I'm putting the links down. Check whatever you feel is fine. Okay, if you want to reach out to me, you can reach out to me and I'll be open with it. Okay, thank you so much, guys. See you in the next video. Share it as much as possible. Okay, see you. Bye bye.